Hey, welcome back. It's JWalter here. The housing market in 2021 was like no other. It was the ultimate seller's market and many records were broken. The flexibility and work at home arrangements have perhaps changed our landscape of our housing market forever. I noticed that searches on Google for stay-at-home jobs absolutely skyrocketed in March of 2020. With stay-at-home jobs gaining in popularity in 2020, Hawaii courted workers to move there. Even the government of Barbados announced the introduction of a new 12-month visa for those interested in working remotely. In addition, the city of Tulsa, Oklahoma paid people $10,000 to move and work there.
But I'll ask you, why are these cities doing this? What are they hoping to get out of it?
That's right. Many are in Middle America, and they've been overlooked, and they've struggled to compete with the New York, San Francisco's, Chicago's of the world. And in Tulsa, Oklahoma, for example, there are a lot of universities, but Tulsa struggles with postgraduate retention. So they are hoping to lure workers with incentives like a $10,000 moving bonus so that and workers will see benefits like cost savings, for example. They can buy their first home, start a family, and many will go on to start companies and hire remotely. And so the aim is to boost local economies.
It goes without saying that many people do not have to be within driving distance of their offices anymore, and that's giving people more flexibility on where they want to live. Rather than spend $5,100 per month on a one-bedroom, one-bath apartment with less than 1,000 square feet of living space in San Francisco, people have moved to Boise, Idaho, for example, where they can buy a home 3 times the size and their housing payment would be a little more than half the cost of that one bed in San Francisco. According to Redfin's chief economist, the ongoing pandemic, including its seismic effect on the U.S. economy and the way Americans live and work, has made 2021's housing market anything but typical. Remote work, low mortgage rates, a shortage of building materials, and wealth inequality that has allowed an influx of affluent Americans to buy vacation homes have come together to create a historic year for real estate. Buyers paid more for houses, bought sooner than they planned, searched outside their hometowns, or all of the above. This year's frenzied housing market has been one for the books, but it may become more balanced in 2022. And speaking of 2022, I made several videos recently with housing market forecasts for 2022 by Redfin, Zillow, Realtor.com, and also my own personal predictions for next year as well. If you haven't taken a look at those videos yet, you can click on those videos up here and also leave a link below for you as well. According to Redfin, there were 10 major housing market records that were broken this year. So let's discuss. Home prices reached all-time highs in June of this year, and they were up 24.4% year over year. Home prices have also grown by double digits all year, and that has been driven by low inventory and high demand. And this is not just one part of the country either, right? This is very widespread. Almost all areas across the nation experience an increase of home prices since this pandemic started. As you can see here on this graphic, the housing market has its ebbs and flows. Home prices tend to peak in the summer and then decrease in the winter months. We've seen this seasonality in our housing market just about every year since 2012. But ever since 2020, our real estate market has been on steroids and our seasonal slowdown has been very short-lived. What also happened this year is that our housing supply dropped to its lowest level ever. This happened in June when our inventory across the United States was down 23% compared to 1 year ago. It's also very important to point out the fact that inventory was already very low before this pandemic started. So for example, at the beginning of 2020, we had approximately 2 million houses for sale in the US compared to around 2.5 million in 2015. Houses also sold in record time this year. In fact, the median days on the market was only 15 days in both June and July. In contrast, in June of 2020, it took 39 days. Buyers and real estate agents have grown accustomed to the fact that once a house gets listed for sale, you have to book an appointment right away and then also place an offer within days of that house being listed for sale before the seller accepts an offer. In the greater Sacramento area where I'm a real estate agent, it's entirely normal for a house to be listed for sale on a Wednesday or a Thursday, for offers to be due by Sunday night or Monday morning, and then the seller accepts an offer Monday night or Tuesday morning. In other words, you have to move very, very quickly right after the house gets listed for sale. And speaking of houses selling very quickly, over 60% of houses that went under contract in March had an accepted offer within 2 weeks of hitting the market. That was an all-time high. And what's crazy about that number is that prior to 2021, that percentage had never surpassed 50% in any month going back to 2012. Yet another crazy record that was broken was the fact that half of the houses that sold for more than their asking price. So for example, out of the houses that sold in June of this year, 56.5% went for above the seller's asking price, and that was a record high. In addition, houses on average sold for 2.6% above the list price in June, yet another record high. What's crazy about this stat is that on average, only 20 to 30% sold for over the asking price from 2016 to 2019. But ever since 2020, this figure obviously has skyrocketed. And speaking of houses that sold for over their asking price, a house in San Francisco sold for $1 million above the seller's asking price after being listed for only 3 days. We also saw record low mortgage interest rates in 2021, with the all-time low dropping to 2.65% in January. And looking at mortgage rates over the past 10 years, rates actually peaked in November of 2018 when the average just under 5%, but they have more or less been on a downward trend ever since then. And because we had record low mortgage interest rates this year, that fueled home buyer demand, which caused home prices to reach record levels as well. And because rental prices have been very, very high as well, this is causing investors to be on a spending spree buying houses across the nation. According to Redfin, investors purchased 18% of houses that were purchased in the US during the third quarter of 2021, and that was an all-time record high. This equates to $63.6 billion worth of houses over that time period. And by the way, I made a separate video regarding that. If you want to see that video, then click right up here. With so many investor purchases buying houses with all cash, and the fact that home prices have reached all-time record highs several times this year, this is causing the share of first-time home buyers to decrease. In fact, the share of first-time home buyers across the nation has been on a downward trend ever since last year. In addition, the demand for second houses doubled in size compared to pre-COVID in resort-like communities such as Mammoth Lakes, California, Lake Tahoe, and Hawaii. And by the way, take a look at this video right here, because in that video, I gave you my housing market predictions for 2022. If you got any value out of this video, then please hit the like button. I greatly appreciate that, and also consider subscribing. Hope you have an awesome day, and look forward to seeing you on the next video.